Today to do business, and we have 55 minutes to do current and relevant conversations, all connected to the world of business. I'm Ini John Mekwa, and this is Business Morning. We start as usual from the oil space, where prices rose more than 1% today after the United States President Donald Trump ordered a total and complete blockade of all sanctioned oil tankers entering and leaving Venezuela, and that's raised fresh geopolitical tensions at a time of concern over demand. Brent this morning we see is up more than 1.5%. But it's still below $60. It's $59.86 a barrel. WTI is up 1.61%, and that's at $56.16 a barrel. Oil prices settled near 5-year lows in the previous session. On progress in Russia-Ukraine peace talks, as a deal may see Western sanctions on Moscow ease, freeing U.S. supply even as the market grapples with fragile global demand. Mr. Trump on Tuesday ordered a blockade of all sanctioned oil tankers entering and leaving Venezuela, adding that he now regards the nation's rulers as foreign terrorists, and it's a terrorist organization. However, crude oil traders in Asia say that the recovery in futures buying after prices dipped below $60 per barrel the previous day was also a key driver of the uptick in oil on Wednesday. And away from the oil and gas space, the African Development Fund, that's the ADF, the concessional financing arm of the African Development Bank Group, the AfDB, they secured a record $11 billion from 43 partners, and that's at the end of its 17th replenishment Fund's meeting that was holding in London. Is the largest in the fund's history, despite severe global fiscal constraints and declining aid budgets. The outcome represents a 23% increase over the previous replenishment and sends a clear signal of confidence in Africa's development prospect. The African Development Bank Group's leadership and a new development model centered on investment, risk sharing, and scale. For the first time in the fund's history, 23 African countries have made unprecedented contributions to their own concessional financing window. A total of $182.7 million was pledged by African countries, with 19 countries contributing for the first time. Alongside long-standing regional contributors, this represents a 5-fold increase compared to the previous replenishment. And now let's look at closing numbers for the Nigerian equities market at the close of trade yesterday. We see a positive one, even though slightly positive, 0.01%. The market has so far, been a bit uncertain, even though it's having positive sentiment. But the all share is still around 149,000, which it started the week with. And then the equities cap yesterday added 14 billion naira at 95.28 trillion naira. Volume yesterday was positive, about 85% up. Value was the only negative in the activity chart, but deals are positive at 23,701. Top gainers were Alex, Guinness, and Multiverse, while top losers were HM Core, Veriscap, and Living Trust. Top trades once again had Access Co. Access Co had a trade volume of about 385 million. Champion follows, as well as Sterling NG. The Central Bank of Nigeria has revoked the operating license of ASO Savings and Loans PLC, as well as Union Home Savings and Loans PLC. According to the CBN, the two primary mortgage institutions failed to meet key regulatory requirements, including the minimum paid-up share capital threshold for their license category, as well as persistent regulatory infractions. Meanwhile, the Nigeria Deposit Insurance Corporation, the NDIC, has commenced verification and payments of insured deposits to customers of the two mortgage institutions, marking the formal start of their liquidation process. And it's a season of budgets, both at the subnational and at the national, starting with Delta State, where the governor, Sheriff Oborevwori, has signed into law the 1.729 trillion naira 2026 appropriation bill, and it's tagged Budget of Accelerating the More Agenda. The 2026 budget, which is over 70% higher than the 2025 estimate, allocates 70% to capital projects and 30% to recurrent expenditure. While commending the Delta State House of Assembly for its timely passage of the bills and effective collaboration between both arms of government, the governor says that the accompanying laws will strengthen social welfare delivery, standardize and expand teacher education, and enhance the state's legal capacity to tackle terrorism, cultism, and related crimes.
The Delta State Anti-Terrorism and Cultism Amendment Law, which seeks to reduce to the barest minimum acts of terrorism, cultism, and activities of related vices. It is very important that I emphasize on all these bills. Let me state clearly that meaningful progress demands bold decisions, and real change comes from the courage to act. So if you don't have the courage to act, you cannot achieve all these programs. In 2026, we will hit the ground running, laying foundation for long-term prosperity and inclusive opportunities.
Neighboring Edo State also, the governor, Mr. Monday Okwebolo, has presented a 939 billion naira 2026 appropriation bill before the Edo State House of Assembly. And according to the governor, the 2026 budget of hope and growth is designed to build on the foundation laid in the 2025 and has a capital expenditure of 637 billion naira. That represents 68%. And recurrent expenditure of 302 billion naira, that's 32% of the budget. He maintains that Edo State will continue to prioritize capital projects such as roads, schools, hospitals, water, housing, and economic projects. Real and tangible development will also be captured. He assures residents that the government will not impose unnecessary financial pressure on the citizens, but strengthen systems and block leakages. Yeah?
This budget of hope and growth is designed to build on the foundation laid in 2025. It's a budget that speaks on needs of our people. It focuses on security, infrastructure, agriculture, education, job creation, and healthcare. For 2026 fiscal year, the budget of hope and growth proposed a total expenditure of 939 billion 850 million naira only.
And still talking about budgets, yesterday the Senate passed the 2026-2028 medium-term expenditure framework and fiscal strategy paper, indicating that the 2026 appropriation bill of 54.8 trillion naira is expected to be presented by President Bola Tinubu this week. The Senate President announced the passage following the consideration and debate on the report presented by the chairman of the Senate Committee on Finance, Senator Sani Musa.
Hours after the Senate President is alleged to have been hospitalized, he shows up on the first legislative day of the week. The nation's budget is at the heart of conversations as the chairman of the Senate Committee on Finance presents the 2026 to 2028 medium-term expenditure framework and fiscal strategy paper.
In the light of the above findings, the committee recommends that 1. The projected crude oil benchmark prices of 64.85, 64.30, and 65.50 US dollars per barrel for 2026 2027 and 2028 respectively be reduced to $60 for 2026, $65 for 2027, and $70 for 2028. This is in recognition of the global geopolitical tensions.
A summary of the revenue and expenditure framework shows daily crude oil production pegged at 1.84 million barrels per day, exchange rates projected at $1.512, inflation rate at 16.5%, expenditure at 54.46 trillion naira, fiscal deficit 20.12 trillion naira, and debt service at 15.91 trillion naira, among others.
Exchange rate of 1,512 US naira for US dollar. So these figures are very, very realistic having regard to our present day economic circumstance.
Without further ado, the report is passed.
The ayes have it. If for any reason at all the circumstances change, this will still be represented to us and the House of Representatives for us to either amend, rejig, or add or subtract. This will enable us, allow the budget to be laid between now and Thursday.
The upper chamber also confirms 3 non-career ambassadorial nominees out of 67 nominees screened by lawmakers last week. Those confirmed are Lateef Kolawole from Ogun State, Aminu Dalhatu from Jigawa State, and Emmanuel Oke from Oyo State.
Those in favor say aye. Those against say nay. The ayes have it.
All right, so those are the parameters that define the framework of government spending that's supposed to be between 2026 and 2028. And just for emphasis, let me share that again, the medium-term expenditure framework. There you have it on the screen. No, that's not it. The framework, the medium-term expenditure framework, that would be the daily crude production placed at 1.84 million barrels a day, and then the exchange rate at 1,512 naira for a dollar, then the inflation at 16.5%, expenditure at 54.46 trillion, fiscal deficit targeted between that period at 20.12 trillion, and debt servicing 15.91. That was what was approved yesterday by the Senate, and of course determines the position of or the look of our spending, by government spending between 2026 and 2028. But even before we get to looking at 2026 expenditure, is always very good, obviously, to see what we have done in 2025 as we exit the year and see what targets we met and what targets we missed. And we'll be doing that this morning with the Chief Executive Officer of Economic Associates, Dr. Ayo Teriba. Dr. Teriba, good morning.
Good morning.
And welcome to the program.
Thank you very much.
So,
good morning, Vias.
Yeah, you shared what you called targets, hits and misses, and you said we did not hit anyone. But let me just read out some of that for the benefit of our viewers. Of the targets that you said we missed for 2025, or maybe I should start with what already were the targets from your perspective. You said the MTEF of 2021 to 2025 targets, they had 2 broad targets, which was growth, employment, poverty reduction. And then there was the annual GDP growth target of 5%. There was the creation of 21 million jobs, the lifting of 35 million Nigerians out of poverty. And then the second targets were public and private investments to fund the budget, 348 trillion naira total investment for the plan, 49.7 trillion, that's about 14% in government investment to fund the plan, 298 trillion, that's about 85.7% that's supposed to be gotten from the private sector. And you concluded that all of the targets were missed. GDP growth, we know, hasn't hit 5%. Job creation has fallen short. Unemployment remains structurally high. Underemployment and youth unemployment over 40% combined. And you said instead of reducing poverty, we've seen over 45 million Nigerians reportedly fall into that. I mean, the World Bank even also corroborated with that. Total investment of 348 trillion did not materialize, neither did the 14.3 that's expected from the public sector, and a whole lot more, Dr. Teriba. Let me just allow you to put your voice to your findings, which you shared with me earlier.
Okay, thank you very much. It's my pleasure to be here. It's a time of the year when government brings numbers on the table as regards to their aspirations. And it's also a good time that we get to hear how accountable, they are to the National Assembly. So you get to know where are we, and you get to know something about where government desires to take us. The documents you have read, because you have to be careful, there are 3 documents that we can discuss. There is the proposal for budget 2026, there is the MTEF, and there's the 5-year development plan from 2021 to 2026 to 2030. The review you read about the targets that were hit or missed is about, of the targets of the 2021 to 2025 development plans, how many were hit, how many were missed. And it's no news to anyone that the 5-year development plan that is ending this month hit none of the targets. It missed all of its targets, whether it was the growth, employment, and poverty target, or the investment target, whether private investment or government budget, all the targets were missed. But notwithstanding, President Tinubu came in mid-term, middle of that plan in 2023, and hit a number of significant targets, including reform of the foreign exchange market, rebuilding of reserves from 4 billion, net reserves from 4 billion in 2023 to 29 billion as of now, according to the Governor of Central Bank. Stabilization of the exchange rate, and indeed, some appreciation of the exchange rate in the course of 2025, and deceleration of inflation, and then the acceleration of GDP growth. So the plan missed targets, but the president came and did policies that weren't in the plan. And through the policies, he has hit targets. And the issue on the table is that the government has now brought MTEF. The details of MTEF had been unveiled, and it has provided a sense of direction for budget next. We can discuss the MTEF, we can discuss the budget. The details of the 2026 to 2030 plan is yet to be unveiled.
Yeah, no, the MTEF parameters is what was approved yesterday.
That's
for
right.
2026
so
to 2028.
We can talk about
But
that.
let's talk about the performance of the 2025 budget. We're exiting 2025, and we ought to learn lessons. We saw Minister Edun at the Senate, I think that was 2 days ago, where he said that 70% of the funding for 2025 is going to be rolled over to 2026, and a lot of the senators were not very happy about that. So what do you see when we look at the performance of the 2025 budget in our targets, our revenue, in our the hits that we're supposed to have?
Very good. It's a very, very important subject, and the exchange between the Honorable Minister, the coordinating Minister for the Economy, and the Senate and the National Assembly was a very important one for Nigeria, for all of us. And I'm grateful to the Honorable Minister for his candor, for his honesty about the state of federal finances, because this is federal finances. And he said that the revenue aspiration for 2025 was 40 trillion, and the government got 10 trillion. That's 25%. And that of the capital allocations for 2025, there's 30% of the money sitting there to execute the projects, and that they want to roll over 70%. And of course, if this is December and 30% of the capital is just still sitting there, it's not done, because we spent most of the year trying to do the capital allocations for 2024, which we initially extended from 31st December 2024 to June, and then now to December. Very good. The reason I commend the CME, for being transparent about the situation, is that this was this fiscal situation that the President Tinubu regime met in 2023. This has been the fiscal situation since 2020, when we started using 100% of our revenue to pay interest on debt. So this, okay, thank God we found the magic to solve the exchange rate problem. We found the magic to solve the inflation problem, to solve the growth problem. Now we are on the fiscal matter. Let it not be seen as a problem of the minister, or as a problem of the president, or as a problem of the National Assembly. It was a problem of Nigeria during the campaign. There was none of the people who were campaigning who did not acknowledge, the dire situation, the dire fiscal situation. Okay, if we have papered over it all along, we have created the impression that exchange rate was going to create revenue. We've just learned that, okay, we had thought that the reform of exchange rate will create 40 trillion. It didn't. We got 10 trillion. And now we are projecting another 34 trillion for 2026. Where is that revenue going to come from? It's a conversation that Nigeria must hold. And we shouldn't deceive ourselves. Okay, President Buhari, when he left, his last budget was 7 trillion revenue that he got. May God rest his soul.
Does it mean that
now we've moved from 7 trillion in 2.5 years to 10 trillion?
Does it mean that
President Jonathan left on 4 trillion?
Dr. Teriba, does it mean that perhaps the parameters are not realistic? Is that why we fall short? For instance, we're not in full control of oil prices, and that's our major stay. The budget of 2025 was expecting oil to be about $75.
And it wasn't.
We know even as we speak, it's less than 60 as we speak. Yes. And a whole lot of global factors drive that. So are we being unrealistic when we set some of these parameters?
Oil, either the price of oil or the output of oil, has disappointed Nigeria for 1 decade. It started disappointing under the President Jonathan and the Okonjo-Iweala. That's why they lost the election. Oil prices collapsed. Commodity prices collapsed. It disappointed President Buhari 8 years. And it has disappointed us in 2.5 years. We should stop talking about oil. We should just forget about oil altogether. Nigeria's opportunity, Nigeria's revenue potential can be independent of oil. The economy is already independent of oil. You've raised foreign reserves from 4 to 29 billion net reserves in spite of oil being weak. Exchange rate has become stable in spite of oil being weak. Growth is accelerating in spite of oil. So the budget, you can do the budget independently of oil. Nigeria has assets that you can generate revenue from. That's the conversation we need to hold now. And it's not about taxes. If anybody is telling you, come January, you just kill the recovery that is in infancy. It's not taxes. You have assets sitting there that you can raise revenue from, and I am for non-tax revenue and for non-debt financing. Nigeria has no reason to borrow 1 dime. And Nigeria has no reason to tax anybody. We have idle assets. So we have the Federal Secretariat sitting there. You know what that edifice, what it is worth. We are not making 1 penny from it. The National Stadium is there. Not 1 penny. The Abuja Stadium is there. Not 1 penny. We have a fiscal committee that has worked for 2.5 years that cannot convert those places to money. And it's talking about taxes. It's not the time for taxes, and you shouldn't borrow money. If you have those assets and you cannot make money from them, we have to examine ourselves. And the only stadium that functions, that is fit for FIFA-rated games in Nigeria is the one in Uyo, in Akwa Ibom. Okay, so if we, the rest of us, are bereft of ideas on how to make stadiums and money, let's hand all the stadiums over to the Akwa Ibom government to run them for us.
I was thinking you mentioned
and make money out of it. We can't have the national stadium.
Dr. Chereba, I was thinking you mentioned the refineries as part of the assets that can be used for revenue generation.
It's an endless list. We have corporate assets, state-owned enterprises. None of them has any known market value. And you have Dangote refineries that started operations 1 year ago, saying it is going to the stock market, will pay dividends in dollars. What about all of the, including Nigerian LNG? What is its market value of Nigerian LNG? We don't know. Who owns 49% of a 6-train LNG plant and goes to Eurobonds to be borrowing $2,000? The world will be looking at you. You own 49% of a 6-train LNG project, and you are cap in hand looking for you are borrowing at 9%. So let's get up. We don't need to borrow one dime. We don't need to tax anybody. Let's make Nigeria's assets generate revenue for Nigeria. Until we hold that conversation, with Senate in the lead, with the President in the lead, with the coordinating Minister of the Economy in the lead, we will be deceiving ourselves. We will be going to beg other countries who have learned how to make money from their assets to lend us money. So what's Dubai? What's UAE? Their governments have more revenue than us. They don't have our population. They don't even tax their population.
Dr. Chereba, maybe because these assets could be, may not, getting revenue from this asset may not be sustainable. Perhaps that's
so you are the country in the world that has assets, but you can't generate revenue from that. We've been telling this story for 1 decade. From the journal, as soon as the oil price fell, we said, turn to assets. List the state-owned companies in the market. Turn to your real estate. Generate revenue from them. Nigeria has prime real estate. Maybe 10,000 pieces of them. We earn nothing from them. We are looking for people to tax. Turn to your infrastructure. Nigeria has many airports, no terminal. And 40% of the money in aviation is generated in terminals. It's not it's not on the runway, it's not up in the air. It's before departure and on arrival. We don't have any terminal. We needed to wait for Enugu State now to come and tell us that they now have the first 5 ultra-modern terminals in sub-Saharan Africa. That's a state. So if we don't know how to run airport terminal, let's give it to Enugu State now and help us to build the airport terminal. So let's commend the pockets of sanity that we have across the country. Yes, Lagos has so many good examples. It has intermodal transport system. It's got probably the most expensive strip of land in Africa will be the Eco-Atlantic City, and we commend Lagos State and the President, who had engineered that. We have the deep sea port. But what money are we making from them? How does it profit you that you have those assets when the federal government cannot even raise 10 trillion and we are drawing up another budget for 54 trillion. So,
Dr. Chereba, from your perspective, these fiscal deficits of 20.12 trillion, that's the approved parameter in the MTEF for 2026 to 2028, can be generated through assets?
100 trillion can be generated from assets. Don't continue to bury Nigeria's talents. Tell us the market value of every state-owned company in Nigeria. Don't make it optional. Every state-owned company in Nigeria should be listed in the stock market. If it's worth a penny, let's know it's worth a penny. Who is running away from the truth? Do 1% IPO, do 5% IPO. You don't have to sell them. You shouldn't sell them. Nobody owns an asset that could generate income. All real estate, let's know what their market value is. Let's know what the options for generating revenue from them are. Stop keeping them idle. It's a shame that we have National Stadium and it's only when you go to Uyo before before you can host a FIFA-rated game. So let's not deceive ourselves. You have access and it's not sustainable. There's no African country that has the asset wealth that Nigeria has.
All right, Dr. Teriba, thank you so much for bringing that perspective. The Chief Executive Officer of Economic Associates, Dr. Ayo Teriba, thank you for your time on the program.
Thank you very much.
All right, now the Director General of the Debt Management Office, Mrs. Patience Oniha, has been speaking on effective debt management practices for sustainable economic development. She was speaking at a forum on state action on business enabling reforms, which is a World Bank initiative. Ms. Oniha also calls for prudent utilization of borrowed funds.
There are laws around borrowing. It's not one of those things that you can choose. This is what I want to do, and you just, sign paper or sign a letter. Okay. So there are laws around borrowing. And why are there laws around borrowing? You want the borrowing process to be transparent. So it's not just one person that took that decision. It has to be transparent. The purpose has to be clear. The loan has to be properly documented. It should be monitored. It should be reported so that you can service it, because when you don't service it, the consequences are not good. So that's when we talk about debt sustainability. If you don't have a record of what you're keeping, how will you know what is due? Or how will you know when to stop that, you have...
Festivities are upon us, and of course it's a time when you want to have festivals. It's food mostly, and we've seen the government make some moves at this time. I wonder if it is targeting this festive season or the next one. But we see the Senate asking the federal government to introduce urgent measures to protect Nigerian farmers from the impact of falling agricultural produce prices. So while consumers are excited that prices are reducing, it's not good, not so good for the players in the industry. And we've also seen that the federal government has commenced phased development of grazing reserves across the country. 3 pilot locations, Gombe, Plateau, and the FCT. Let's dissect this now with the Managing Director of Omotunde Banjoko Farms Limited. He's also the Chairman of Agri Group of Lagos Chamber of Commerce and Industry, Mr. Tunde Banjoko. Mr. Banjoko, first, happy compliments of the season. We're already there, yeah?
Yeah, we are in the mood already.
And the food seems to be there, especially rice. The way rice is flying everywhere these days.
Yeah, the price is significantly down for rice now.
Yeah, especially when you look at it year on year.
Year on year, rice, beans, curry, even tomatoes.
Even tomatoes. What about pepper?
Pepper, I think slightly though.
Slightly.
But we
Not
can't speak
as
of pepper. We can speak only of rice, of yam, beans, and gari. Those 3 commodities, and even maize too.
Even maize is down. That will have a lot of good for the value chain, because you want to eat chicken.
But it's not. It should, but it's not.
Someone is taking our benefit, middlemen.
I think the processors in between, the feed mills, are like the bottlenecks in that value chain at the moment, because the reduction in the cost of their input is not reflecting in what they are selling. Because about this time last year or early in the year, a ton of maize was around 900,000, but now it's around 220 to 300,000. But most of them reduced 500 naira, 800 naira.
So we need to shine a light on them.
So we should look at them. But what I think some of them are doing is also probably trying to recover some of their past losses. So where we're thinking they would have also, reduced their price by almost 30%, 40%, we are seeing 100 naira, 500 naira. So it's not making us have effect. But still, looking at year on year, the price of poultry too is significantly low. Moderately lower than last year. Because, looking at, average chicken last year, people will always go for either the old layers or the broilers. Last year, you were doing between maybe 8 to about 35,000, 36,000. But this year, I think the price is looking around 8 to 25,000. So probably people will be able to at least hopefully afford something.
Hopefully.
Good. Yeah.
Hopefully. And now that the Senate is asking the federal government to introduce measures to protect the farmers, that's the other side of the divide.
So that's the other side of the conversation, because like you said, consumers are happy. We are consumers.
Yes, but even the farmers are consumers.
As farmers now, the government is missing some stuffs in between. I think I love what the senator from Gombe State mentioned, Senator Goje or something. While the government wants the price of food to be down, that's what every Nigerian wants. But we should do it the right way. The right way is not just by giving partial waiver and importing food massively into the country to crash prices, not considering the cost of production of current farmers. That should have been factored in. Or probably a commodity board, like I've always said. You could have associated, bring the farmers together. How much is it costing you to bring this food to this production stage? Then can we find a way to buy off you at a reduced rate? That would have sustained production. But the current method is not going to sustain production because people will be discouraged. I'll look at a ton of cassava currently. It's doing about 52,000 per ton. What we are selling around 150, 160,000 per ton. So you had gone to borrow money, you have gone to raise capital, thinking you sell around 150, 140. Now you are selling at a loss. I have a friend who said rather than sell, he will leave his cassava to be buried in the ground. He came from the US to invest in Nigeria. So are we going to be encouraging investment if their prices are not meeting up cost of production? So the government should look at how to encourage the farmers by bringing down the cost of input. Fertilizer is still selling, I still bought 55,000 per bag, and I bought quite some numbers this year. And then they have some subsidized one for 40,000 that you rarely get in the market. So the government should prioritize subsidizing input for farmers, not just crashing the food at the market value.
So my problem with this conversation is that, as it happens in most of our issues, is we're having this conversation when the issue is already on. So, these are things we should have pushed for.
We should have planned it all together simultaneously. You could have, we said something early in the year, the capitalization of Bank of Agriculture, we are all excited, but as at now, that has not been done. This is December, so obviously I'm not sure that's longer happening 2025. So if that had been done, for example, and farmers are taking funds at lower rates, then production would have been increased, because somebody doing 5 hectares could have done 10 hectares with cheaper funds. Then if the government had brought in the input and say, okay, farmers group, you take this input, what you would have bought 9,000, we've got it for you at 5,000, at 6,000. Those are the areas that I think the government should be looking into, not just looking at the end, because it looks more like a political move, not something to sustain the industry. It looks like you want people to be happy with you, but those that have gone into the industry, and we keep telling, okay, the young ones should come, the old ones should stay, and all that, but who wants to stay? So everybody's asking, how am I going to survive as a farmer?
And the consequences of this, or some of it, would be that people will start leaving the agricultural sector.
That's the consequence.
And then we'll now have a squeeze of supply.
So now, by the time you can't sustain your imports, what would have been produced locally will not be able to sustain the population, and then the price that you are trying to micromanage will skyrocket because it will now become demand and supply. So definitely demand will overshoot supply at some point if the government do not pay attention to what the senator is saying.
Yeah, well, I hope that the Senate or the Senate committee would push this onto so it's not just something they mention.
I'm happy it's coming from them, not from farmers like us, because
they wouldn't have heard if it was coming from.
Yeah, so if it was coming from us, they would have thought, okay, probably is he a PDP guy, is he an APC guy, But coming from a senator who is coming from a farming community in Gombe State, speaking for his people, and that's what we expect these legislators to actually be doing. When you see an area of concern, you should push it because they have those platforms to push those conversations. So I really commend that, Senator.
All right. And the other thing is the grazing reserve. Long time coming, but it seems it has started. This is on the news. Please tell me.
Okay, I will still say, to be honest, I have not gone to the site, so I won't say. But I think from what I gathered, I think the pilots conversation has started.
At least we should see the one in Abuja. That should be in our faces.
Abuja, I have not seen any picture or anything to really validate that information. But I want to believe the government that those three have started, even though I'm wondering why picking those three states, because bulk of our grazing reserves are actually in Adamawa, Bauchi, and Borno states. And
could it be they're trying to see a more secure,
I don't know,
so that at least to have a good impression?
Because I would have thought we have about 417, about out of the 417, only about 141 has actually been gazetted, mapped out, ready. They are trying to gazette additional ones to take it to about 253. I would have thought the areas where we have more and where we have the push of some of these herdsmen should have been the pilot. But I think what I see in this is it's likely to be sustainable. Unlike the one that is previously driven strictly by government, the federal government, I think what they are trying to do now is to involve the state government and bring in the private sectors. So with the private sectors coming in now, probably I think it should be better and sustained, because I think they're expanding the scope now. So it's not just about want to give them ranching. They're talking about the lives of also those, the pastoral guys, talking about communities for them, hospitals, schools, and all that. So probably with that information, it might be better, probably with better funding.
Another thing that could make it sustainable is the choice of the private sector. Yeah. I mean, with this political intonation, you understand. So if we want to get the private sector involved in this grazing reserve, who are they? What experience? What's their expertise? Or is it just about their political party?
The private sector, like we've always said, ranching or cattle rearing is a business. People are doing it already. Private businesses are doing it. They are running it with proper slaughters. So what I think would attract any private sector guy now is to see the numbers and see the transparency of the government. For example, anybody going into ranching will not be talking of 2 years agreements. They will probably be talking of minimum 10 years agreement with the federal government, even 20 years agreement, and to be sure that, because most times what does government drop? Government rarely drops money. What they drop most times is infrastructure, and they want to give you that framework and that safety that, okay, if you bring in 1 billion, you can have this territory, because that 417, because I look at 417 and then you are starting with 3. So when are you going to get to 417? So it's going to take a long time. So the best thing is to invite the private sector. People are willing to invest, I'm sure of that, because from where I sit, I've seen a lot of investment come into agriculture in the last 1 or 2 years. A lot of guys in diaspora, most of them, agriculture seems to be like a way of easing back into the economy. Some of them, I've had several conversations now that, I'm coming back, my plan is in the next 2 years, but I want to get my farm settled. Like the one I mentioned, for example, he's also a diaspora, but he has invested, but the price of cassava discouraged him.
What about insecurity?
No, the insecurity is still a challenge. We can't shy away from it, but of course there are areas that are relatively secure that people are investing in. So people can still continue investing in those areas. But government still has to prioritize security because it's a continuous conversation. The first thing anybody's asking you is that, Mr. Banjoko, am I safe in that area? That's the first thing.
So I guess that is one of the incentives, that
so you have to
the
provide,
infrastructure that the government can.
So by the time people see, like if I could mention Oyo State, for example, they are trying to do something in the old Fashola estate. I think they revitalized that estate. They also have ranching. I've seen some of the cows in that area that they have in their ranch. So if you provide the framework, security, all those things, people will come. People are interested in investing.
All right, we hope that will be provided. But not talking from your farmer's perspective now, it's going to be a very dirty December. At least we eat plenty of rice.
I think this December, going with the prices I've seen in the market, I think it's going to be a lot better than last year. And we hope it will only get better. I wish all Nigerians a jolly and Merry Christmas.
Thank you. We wish you same. And we wish the farmers too a very bountiful
harvest and return on our investment.
Exactly. So that you be encouraged to continue.
So that we can be encouraged to keep feeding the nation.
Exactly.
Thank you.
Thank you so much, Managing Director of Omotunde Banjoko Farms Limited, and also the Chairman, Agri Group of Lagos Chamber of Commerce and Industry, Mr. Tunde Banjoko.
Thank you for having me.
All right, now we have to take a break, and then when we come back, we'll go global. Welcome back. It's time to go global now with Ladi Williams.
Morning, Good morning. So much to unpack this morning, and a lot of Tesla. I love to talk about Tesla, this morning. But let's kick off with what's playing out in China now. We see the race for driverless dominance is hitting a new gear. Chinese robotaxi stocks are surging today, riding a wave of optimism sparked by none other than the Tesla in Hong Kong. Pony AI jumped over 5%, and WeRide, that climbed 3%. Why? The rally, it's the Musk effect. Following Tesla's record-breaking run overnight, Elon Musk just confirmed, Tesla is officially testing robotaxis without human safety monitors. That's a massive signal to the market that the autonomous growth lever is finally, being pulled, with the Bank of America now calling this a $1 trillion opportunity in the U.S. alone. The battle between the established Chinese players and Tesla's software edge is just, getting started at this point. Now we see history has made on Wall Street. Tesla stock has officially soared to a new all-time high, touching an incredible $488.61 per share. That push brings the EV giant's market cap to a staggering $1.62 trillion, signaling a massive wave of investor confidence in Musk's long-term vision. The momentum is undeniable. Over the last 6 months, the stock has surged more than 4%, while some analysts warn it's trading at a high earnings multiple. The bulls aren't backing down. Between testing driverless robotaxis and $1 billion investment in German battery production, Tesla isn't just breaking records, it's redefining the future of transportation. We're definitely watching out for that. Then Meanwhile, we see Tesla, they're doubling down on Europe. The EV titan has just announced a massive $1.2 billion investment to supercharge its German gigafactory. The goal, producing up to 8 gigawatt hours of battery cells annually by 2027. This isn't just a factory expansion, it's a play for the total supply chain dominance by bringing production closer to its Berlin, Brandenburg hub. As Tesla is looking to slash costs and insulate itself from global logistics headaches. As the competition in the European EV market heats up, Elon Musk is writing a $1 billion check to ensure Tesla stays in the lead. The battery war is officially on right now. Then we also see the bidding war for Hollywood's crown jewels just hit a major roadblock. Warner Brothers Discovery shares is slipping today as the company prepares to pull the plug on Paramount's massive takeover bid. WBD is expected to officially reject Paramount's $108 billion all-cash offer, choosing instead to double down on its existing merger deal with Netflix. It's a high-stakes gamble by CEO David Zaslav by rebuffing David Ellison's hostile 11th hour bid. The board is betting that a Netflix partnership offers more long-term value than Paramount's pile of cash. With the Paramount offer set to expire in January, all eyes are now on Ellison. Will he sweeten the deal, or is Netflix about to walk away with the keys to the kingdom? Well, the media landscape is about to change, at this pace. All right, up to Canada now. They're laying down the law for digital currency. Bank of Canada Governor Tiff Macklem has officially unveiled the roadmap for stablecoin regulations set to hit in 2026. The mandate is clear. Any stablecoin operating in the North must be backed one-to-one by high-quality liquid assets like government bonds and pegged directly to a central bank currency. Macklem's goal is to turn stablecoins into good money, as reliable as a bank deposit, while opening the door for instant global settlement through the new real-time real system. As Canada modernizes its payment bones, the Wild West of crypto is being traded for a regulated frontier. The future of Canadian cash is going digital, and it's going to be strictly supervised at this rate. Now we see a major sigh of relief for the UK economy. Inflation has taken a sharp dive, with the annual CPI cooling to 3.2% in November. That's down from 3.6% in October and marks the lowest level in 8 months. Even better, core inflation also slipped to 3.2%, signaling that price pressures are finally losing their grip. This cooling trend is the green light markets have been waiting for, with the Bank of England meeting tomorrow. The odds of a Christmas interest rate cut, that's just skyrocketed now. After years of stubborn prices and high borrowing costs, the tide appears to be turning for British consumers. The question now isn't if the bank will cut, but how fast will they move in 2026? And we see Chile turning a corner. The nation's central bank has just unanimously slashed interest rates to 4.5%, signaling renewed confidence in the Andean economy. The 25 basis point cut comes as inflation cools faster than expected, hitting 3.4% in November. It's a clear win for the bank's fight to bring prices back to earth. But it's not just about inflation. With copper prices surging past $5 per pound and investment in tech and machinery picking up, the central bank sees a stronger external boost on the horizon as the global outlook brightens. Chile is moving fast to ensure it captures the momentum. The goal there is reaching that 3% inflation target by early next year, while keeping the recovery at high gear.
Thank you very much, Ladi. That's it for Global News and for Business Morning. Thank you so much for being a part of this 55 minutes journey. We'll have, of course, a fresh episode tomorrow, same time. But 1:30, Ladi will be here to take you around the world of business in 25 minutes. That'll be during Business Incorporated. I'm Nigerian. Enjoy the rest of your day.